JP Morgan put out a research note recently basically arguing that Bitcoin had room to catch up to gold because of the debasement trade.
The question that I would ask is, do you believe that the current risk-free rate, which is the Fed funds rate, will be the risk-free rate in perpetuity? And believe that with 100% conviction. No investor should say, I believe this with 100% conviction in perpetuity. It is akin to saying, I am not 100% certain that dollars will be the global reserve currency forever and for always. That sounds like a radical thing to say in a very short-term basis.
Yeah, if you were born at any time after World War II, right. It seems crazy.
Exactly. But there have been lots of currencies that have been the global world reserve. Currency, what's called exorbitant privilege, is ultimately abused by anyone who's had that exorbitant privilege of being able to print money. People have concerns about the long end of the curve and the Fed's ability to keep inflation in check.
So we're figuring some things out, and we had a big Bitcoin miner that broke ground, and they encountered some roadblocks. Within a day, we had 4 ministers on the phone that fixed the problem almost instantly. And it's because this industry has our attention. So there are hostile jurisdictions that don't want Bitcoin miners in Alberta. That's not us. Not only do we want you in our province, we're going to roll out the red carpet, and we're going to do whatever it takes to get shovels in the ground as quick as they can.
Bitcoin cratered last week to lows in the 100,000s, but it has recovered today to 111,000, up about 3% over the last 24 hours. But all of the negative price action has the talking heads clamoring and asking, is the bull market over, especially considering equities and gold rallied last week? Well, we don't have that answer for you. We do have a 2 for today, and the first half of it might help serve as a guidepost for where we are in the current cycle. Welcome back to the Mining Pod, brought to you by Cleanspark. Today, like I said, we've got 2 shows kind of spliced together for you that we recorded at NABS, the North American Blockchain Summit in Dallas a few weeks ago. For the first half of the show, we have the head of digital assets from Rowe Price, Blue Macellari, on to talk about where she thinks we are in the current cycle and how institutional adoption may have changed the market dynamics so much that the 4-year cycle is over. And for the bookend of today's show, we have Dale Nally, the Minister of Red Tape Reduction of Alberta, on to talk about how Alberta fits into the AI revolution. Stay tuned, y'all. We enjoyed both of these. We hope y'all do too.
Guys, there is a serious problem right now in Bitcoin mining, and we need to talk about it. You need to pay attention to this. Bitcoin miners are identifying as AI companies, and people keep missectoring them because they say, well look, your infrastructure is clearly for Bitcoin mining. What do you want me to do about it? I'm going to tell you what you need to do. You need to call FBox, the leading digital infrastructure company with all-encompassing cooling solutions. FBox designs industry-leading air, hydro, and immersion cooling systems for Bitcoin mining and AI and HPC data centers. I want to highlight that. If you're a Bitcoin miner who needs to bridge the gap, if you're pivoting or doing hybrid operations, they can build cooling solutions and infrastructure for both your Bitcoin mining and your AI and HPC operations. And they have an in-house API that lets you monitor it from the web or on mobile. So go to www.fbox.tech/contact to learn how FBox can help you optimize your digital infrastructure today. Welcome back to the Mining Pod, y'all. We have Blue Macellari, the head of digital assets at Rowe Price, here to talk about institutional adoption of Bitcoin, institutional appetites, and kind of the outlook that we're seeing from all of those bigwigs up on Wall Street that are pumping our bags.
Thank you.
How you doing, Blue?
I'm really good. It's great to be here. Thanks for having me.
Yeah, absolutely. Really happy that you could jump on. Appreciate you hopping on. We are recording this live at the North American Blockchain Summit in Dallas, Texas. Big shout out to the Texas Blockchain Council. They always do a great job with this event. And I think this year has been really one of the more holistic years. I mean, there's a lot of finance this year. They had the kind of an auxiliary summit yesterday for the Texas Stock Exchange, so that there's a heavy presence for just traditional finance this year. Whereas in the past, Bitcoin miners, I think, have taken a kind of front seat. There's now kind of more sharing, I think, within the general audience. I don't know if you feel that way. I don't know if this is your first year, but...
This is my first year at this conference, but I think it's something we've seen at all the conferences I've been to the past few years. Like, we're seeing more and more people in suits, less and less people in t-shirts, and especially homemade t-shirts. So no, I think that I think it's great to see the level of institutional adoption and engagement.
Last week, the IBIT, BlackRock's iShares IBIT ETF broke into the top 20 by assets under management. $60 billion plus. It's the fastest rise of any ETF into the top 20 that I know of. I haven't seen anything to contradict that. Notably, it's one of the only commodity ETFs in the top 20 next to gold. Makes sense, some signal there. But I mean, How do we feel about this? This is a meteoric rise. There's an argument to be made that it was a long time coming. You should expect this kind of pop up. It's like, a beach ball underneath the surface of the water. But there's a part of me that feels like it's getting a little frothy. What's your read on it?
Yeah, I think there was a lot of pent up demand, right, for a wrapper that people were comfortable with. I think the question about frothiness, a really big debate this time around, which I feel like people are having everywhere from panels to, Telegram chats, is this cycle different? And I think we won't know until 2 years from now.
Right.
But I think the entrance of institutions changes the time horizon, the sort of risk profile. It introduces a level of stability to holders that we haven't had previously. And I think that will make a difference. I'm not saying, that this cycle is totally different. I think that it will be different. And I think we're going to learn a lot from this cycle. I don't think I'm able to predict what it means. Like, what different?
So I'm glad you mentioned the cycle, because that's one of the questions I was mentioning before we started recording. I mean, how does institutional adoption change what Bitcoiners view as the typical 4-year cycle? I mean, a common thesis now is that you shouldn't see as large of a drawdown. I'm wondering how much that institutional allocation changes Bitcoin's kind of like floor in a bear market. Do you know what I mean?
Yeah.
Does it? Is that a shared illusion? Are there other changes to the market structure that you think are more important?
Yeah, so I think there's sort of two that are top of mind. So the first one is that something that's very different this cycle is the ability to trade, like the futures market being largely onshore US, which was not the case last time around in previous cycles, combined with the spot ETFs in the US, has given large hedge funds the ability to do the basis trade this time around. And the basis trade is positive as long as you have upward trajectory. There will come a time where the basis trade starts to kind of roll back and people exit that trade. So that is a certain portion of the sell-off. But sort of a counterbalance and a very different type of holder is if you are holding, for those people holding like Bitcoin ETFs in retirement vehicles, it's not money you need to access. It's not levered.
You're parking it for decades.
Nobody's looking. You're like, I'm not doing anything with it. It's sitting there and it is, sort of let it ride. And so that becomes an incredibly stabilizing sort of force. And I think we don't have enough data to know exactly sort of how those forces play out.
Yeah, it's really uncharted waters right now in terms of how the maturation of the market participants in Bitcoin. Obviously, it's just at this point. Last cycle we had a taste of it, but it was obviously like we still had the clowns at the wheel with like FTX and stuff.
Yeah, I mean, we're our own worst enemy, right?
And it feels right, and it feels much less the opposite now. The big boys have been driving this cycle, and I'm curious about what you feel that means in terms of retail adoption. I feel like a lot of frustrations with Bitcoiners who are glued to like Glassnode or their on-chain analytics platforms say, we're not seeing the retail inflows as much this cycle. I've always been of the mind it's like they're just they're hiding because they're on paper. They're at the financial institutions, they're buying ETFs, they're doing they're putting it into their retirement accounts. I don't know. Does that on?
I mean, I think it's you also have to differentiate between behavior among retail investors. And so I think that even within retail as a label, meaning like not an institution, like or individual, I think there's still a breakdown between sort of fast money or hot money and sort of more long-term horizon holders. The long-term horizon holders are probably in the ETFs. Mm-hmm. They're probably looked at it and said, I want this in a tax advantage format. So they did it in the IRAs. And when you get fast money, like usually portends the very, very top of the cycle. That's where you get a lot of churn. Things get super frothy, and we haven't seen that. I mean, one of the ones that always gets me is people have to look at how much the exchanges, where the exchange apps are in terms of downloads on the App Store. Yeah, and I was like, I feel like everybody still has that exchange app from the last cycle, so I don't know that's going to tell us anything.
Yeah,
but I don't. I think that a lot of fast money will still be on retail exchanges rather than ETFs.
But you don't think the fast money is here yet?
I think a lot of fast money got burned
and so they're
last time around.
Okay.
And I think so they're maybe later to this cycle.
Or not at all, maybe.
And also, I mean, I don't think we've seen the real, like, we've seen consolidation here. We have a lot of selling by whales. And this sort of consolidation period, I don't think that we have seen that like last like huge market rip that you usually get. I don't think we're at the top.
Okay.
And then when you add like, what does monetary policy look like with a new Fed? And that, like, you know, JP Morgan and the FT are publishing about the debasement trade. I think we just don't know what comes next. I think it's going to be really interesting.
I want to put a pin in the debasement trade. That's actually perfect segue, but I want to touch on one more crypto, little brother crypto, Ethereum, before we move on to the macro stuff. I saw a post from Matthew Seigel recently that was pretty interesting. And he was looking at the percentage of Bitcoin and Ethereum supply held by like crypto DATs, the digital asset treasuries. And Ethereum is catching up to Bitcoin. Now, that's not like total value. Obviously, like Bitcoin treasury companies, the market capitalization of those companies and the amount of Bitcoin held is still, I would imagine, several multiples higher than Ethereum. But the institutional appetite, at least from that, seems to be catching up. I'm curious what institutional adoption you see or institutional appetite you see at all for something like Ethereum, or is it just everyone wants orange coin?
There has very much been a narrative the past couple months. The conversation has been, Ethereum is the chain for Wall Street. And when we talk about tokenized assets and real world assets coming on chain, then we're talking about that happening on Ethereum. I am less sold on that thesis than I think most people. I think there are two other chains that I think are potentially better positioned from cost, both in terms of cost effectiveness, time to finality, throughput, and those are Solana and Avalanche, who are sort of more technologically equipped to support tokenization of assets that need to move quickly. If you're going to tokenize real estate, nobody needs that real estate transaction to settle in 7 seconds versus 10 minutes. Who cares, right? It's all a step up from how it happens now.
Right.
But I mean, one of the sort of very mainstream conversations that's happening at an interest right now at T. Rowe Price, any of our peers, is everyone is focused on stable coins, right? And it needs to be cost effective to move stable coins, whether it is $3 worth of stable coins, 30 cents worth of stable coins, $300,000, $3 million. And it is not clear to me that is the case, that Ethereum can do that. And then we're like, okay, well, now we're on to layer 2s. And who cares a lot about all of the technical definitions of finalities? Institutions. Right? There's a big gap between between sort of technical finality, legal finality. Those are all like matters that they're very important. So I think that there's a lot of education happening by Wall Street on Ethereum for people now. It is just not clear to me that core narrative around Ethereum is literally like a slam dunk as it sort of is being treated. That's
a really salient point, that the layer 2 might not be compliant. I've never thought of that before. All these technical solutions are always heralded as like, the banks can do this. It's like, but is the settlement actually considered final for the banks?
What is the legal status of that? And in the very exciting world of settlement finality, apparently it all comes down to UCC, which is like universal commercial code, right? Like it comes down to this, like it's going to be in this corner of the law that stuff gets settled, like figured out. But it's very, very important, right?
Right. All right, back to macro debasement trade stuff. JP Morgan put out a research note recently, basically arguing that Bitcoin had room to catch up to gold because of the debasement trade. Will you explain to listeners who might not know what the debasement trade, what it is? I mean, it's basically the whole thesis for Bitcoin, but I think it's important maybe just to...
Yeah, so the debasement trade is when we think about the debasement of fiat currency, and in this instance, largely the US dollar, which has come into focus in recent years, in the past couple of years, which had sort of never been a topic anyone considered. And if you want to get super dorky and wonky, the question that I would ask is, do you believe that the current risk-free rate, which is the Fed funds rate, will be the risk-free rate in perpetuity? And believe that with 100% conviction. And I think it's difficult for anyone to say, well, I believe. No investor should say, I believe this with 100% conviction in perpetuity. Being rigid is very expensive. So if you don't believe that the U.S. Fed funds rate will forever and for always be that risk-free rate for the entire global financial system, it is akin to saying, I am not 100% certain that dollars will be the global reserve currency forever and for always. And that sounds like a radical thing to say in a very short-term basis.
Yeah, if you were born at any time after World War II, right. It seems crazy.
Exactly. But there have been lots of currencies that have been the global world reserve currency, and there tends to be a cycle, and ultimately what's called exorbitant privilege is ultimately abused by anyone who's had that exorbitant privilege of being able to print money. So the debasement trade is sort of taking it from like the, from the hardcore Bitcoin maxi and putting it into like financial market terms and saying people have concerns about the long end of the curve and the Fed's ability to keep inflation in check.
Yeah. And so you were mentioning earlier that, you see kind of the macro outlook having some incredible headwinds for Bitcoin in terms of like the Fed regime seems to be changing. The market last time I checked was pricing in like a 90% probability this month and an 86% probability in December for another cut. Where are you on what that actually does for Bitcoin? Because a lot of people will say, obviously lower rates might be good for the credit cycle. Other people are saying this won't affect the credit cycle now. It's actually maybe bearish because you don't cut into good times. Where does that leave us for the next year or so, do you think?
So this raises like two really interesting questions from my perspective. So the first one is that in the ZIRP, in the zero interest rate period, when tech stocks were just up, everyone loved to say that the Bitcoin was just very closely correlated to tech stocks. It was like, what was it they said on Bloomberg? They were like, oh, it's a tech stock in a trench coat. Yeah. And I was like, okay, I get it. Fair enough. That's how it's performing. But the question is, does Bitcoin do what we believe that it should do and fulfills its purpose, which is when you have concerns about the fiscal sustainability of the United States, and whether you express that in terms of rates or in terms of FX, it's all the same argument. And I think a big question that I have is we get multiple cuts, at least one, multiple cuts going in. What happens if the long end of the curve blows out? Like what if the bond vigilantes, are back? And I think that is when the debasement trade comes into play. It is what is an alternative asset when fixed income is not doing what it's supposed to do.
And you believe that Bitcoin is that fixed income alternative for people who are taking the other side of that trade, basically.
So I believe this very much only on a personal level for my own personal account.
This is not the opinion of T. Rowe Price.
This is not the T. Rowe Price view. But I believe that there is a systemic, like Bitcoin and gold are both systemic hedges. They are hedges against the debasement of fiat currency. They are hedges against, an abundance of debt or a negative debt cycle in the United States, or in any sort of developed market. And so I think that it is a hedge for fixed income in many ways. We can get a situation where the long end of the curve really blows out, even though the Fed is cutting, and that should be a big red flag for everybody.
And we saw shades of that right earlier in this year. Basent was really and the Treasury have really having trouble controlling the curve. They weren't able to drive rates down, yields down the way that they wanted to. And even when the Fed cut, they did drop, but it wasn't as spectacular as everyone was hoping. Right.
And also there was then a drift back up, and we saw, and it's especially that long end of the curve. And I think this year, at the start of the year, at the start of the sort of the shift in Washington, new administration, I think there was a lot of emphasis and focus on I don't want to say fiscal austerity, but some signs of fiscal responsibility. And I think there was a lot of anticipation and expectation around that. And it hasn't materialized to the extent. I think the budget bill kind of like threw a lot of that out of the water. Yeah, and I think is it possible that we look back in 10 years and are like, the moment they canned Doge was like the moment that the budget lost like that.
Right.
That credibility.
Going back to like Bitcoin and gold right now, and Bitcoin continues to trade pretty risk on. There are times when it seems to be kind of decoupling and taking the other route, and Bitcoiners cheer, and then Joe Weisenthal gets on Twitter when it reverts and then says, see, you're all losers. But what would it take to push Bitcoin into that risk off? Or do you think that we're just modeling it wrong maybe, and people have the wrong expectations for it right now? What does that evolution look like? Does it ever happen? For it to become like, for it to trade like a risk, both a risk on and a risk off asset? I would say more firmly risk off. So I think that one of the really big things that we have seen change in recent years is that the conversation around debasement, the conversation around U.S. rates, U.S. debt, call it the debasement trade, that's what we're calling it as of 8 weeks ago or whatever, have become mainstream. And it used to be the Bitcoiner that came for Thanksgiving dinner and everyone was like, oh God. And now it's, now it's a Ray Dalio. So there's I think there has been a shift in terms of how people in mainstream finance and real thought leaders in finance are expressing concern about those core issues. And I think a very interesting question that sort of divides along generational lines oftentimes is what investors do with that information. And I think older generations buy gold, and I think younger generations buy Bitcoin. Yeah, I think that's true. That's literally me and my dad. My dad's been having a field day this year. He's with the gold trade. Yeah, he's like, gold's ripping again. I was like, yeah, Dad, that's great. But I'll show you the 5-year price chart. Right. But, and I think that there's a certain portion of investors where keys, self-sovereignty absolutely do matter, right? The idea that if you own a gold ETF, you can't go down there and get your, nobody's taking their bars of gold with them to the bunker, right? So I think there's an element of that, but I think it's a pretty small cross-section of the investor universe in these assets now. I think most people are comfortable that they're in a financial realm. I think that's largely true. All right, last question before final thoughts, and we're going to be verging into the technical and cultural. I'm not going to ask you any technical questions, but I'm just always curious about this because, as I was saying before we started recording, my co-host for Bitcoin Season 2, Writer's Room, it's one of the shows we do. We talk about technical topics all the time. We talk about all of this infighting that's always going on between these different technical enclaves within Bitcoin. And there are these very colorful debates going on right now about filters, which are related to inscriptions and NFTs and all that stuff, and whether or not we should be trying to keep this stuff out. I'm just curious how much, if any, of all of that chatter ever gets into the investor rooms. And the answer is none. Crazy to think about. There are definitely people on my team who are in those, who are following those conversations, and then they're not going, we're not following those conversations. So there's someone on the team whose job it is to be that young and plugged in. And that's not me. But I think when a big question comes up that affects the investability, I think that bubbles to the surface and gets addressed. So quantum, I think I fielded 25 questions about, quantum compute. I was like, don't worry, if anybody's able to, if anyone's equipped to handle this, it's Bitcoiners. Of all the people that I would be worried about being on top of it, Bitcoiners bottom of the list. Right. Be much more concerned about getting on a plane or your bank account. Yeah, or your literally smart card, everything else. But okay. But yeah, I was the one who got all the questions around quantum compute. So I think that it really has to. It just still takes a lot for that to bubble to the surface. If there were a major upgrade like Taproot or SegWit or something like that, that would be something that's here's what you need to know. And maybe there were a contentious hard fork, but just note that, guys, Wall Street does not care about your Twitter beefs. No, I'm reading them. But I said ordinals in a meeting a couple of weeks ago, and everybody just looked at me blankly. I was like, never mind. We'll back off from that. Yeah. Well, Blue, this has been fantastic. Any final thoughts on where Bitcoin is, where it's headed, expectations for the next year or so? I think that this is going to be probably one of the most interesting cycles that we have. I'm very excited, and I think that we have a lot of momentum going into the next year, and I think that this is going to be a maturing cycle. It might not be the most mature, but I think we're on the path to maturing, and I think that that's a really exciting thing. Bitcoin's starting to put its big pants on. Yeah, we're at the big kids table now.
We are Cleanspark, America's Bitcoin miner. a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work. We are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at cleanspark.com.
Hey, welcome back to the Mining Pod. We don't typically have politicians on the show, but we do today.
We do today. I'm from Alberta, and we are a jurisdiction not unlike Texas.
Yeah.
And we are a freedom-loving jurisdiction, and we embrace Bitcoin. So I'm happy to be here.
A lot of people who love the show, listen to the show, are huge fans of Alberta. It's quite a common discussion point. And we have a lot of Albertans listen to the show because of the Bitcoin mining, energy generation, and just the general interest in bringing compute to that area of Canada.
Absolutely.
Let's go through your background really quickly. And one of the reasons we asked for you guys to come on the show is not only that you happen to be down here at NABS, which I think is a huge signal, but also the fact that you were a minister for natural gas and then general energy in Alberta as well.
Yeah, I was the Associate Minister of Natural Gas, and it's an important resource in Alberta, and it's a competitive advantage. We have a 200-year supply of natural gas, and not for nothing, but we have one of the cheapest feedstocks in the world. So if your listeners aren't looking at Alberta as a destination, I would encourage them to start because we've got the resource.
And then your current position is Minister of Red Tape, as I took it.
So I just have to clarify, it's Red Tape Reduction.
Red Tape Reduction.
Yeah. Full title is Minister of Service Alberta and Red Tape Reduction. The best part of that file is the Red Tape Reduction piece.
Yes.
And that's why I have the Bitcoin file.
Yeah.
The Premier had the foresight to give it to the minister responsible for cutting red tape so we could make it easier to attract investors like the Bitcoin industry. Our energy industry is world class.
Yeah.
And it is it's almost a hidden secret on the natural gas side. The fact that we have so much gas and that it is the cheapest feedstock literally in the world.
Yeah.
And so I would encourage companies that are looking to invest, look at Alberta.
Well, okay, that's what I really want to get into on this show. For some context for listeners, the XAI Colossus programs out there, the Stargates, they're using natural gas turbines on site. They're basically taking jet engines, bolting them to the ground, and then piping in that gas, in that case in Texas and Tennessee. But in other cases, we're seeing, all over. Alberta is certainly a spot people are interested in for Bitcoin mining. We know that BitDeer has been working in that area quite a bit, and we've had them on the show multiple times and have been doing a lot of Wall Street stock kind of rating stuff around that happening, right? Like, it's not just that they secured the asset, but they're being rewarded for realizing that asset is valuable for them and generating so much revenue.
Oh, yeah.
I'm curious what you mean by the 200-year supply, though. What does that land the plane for someone who might not know exactly what that means?
We have more than enough gas than we're ever going to need, because I think 200 years from now, we'll probably figure out how to capture the hydrogen in the air, and we're not going to need natural gas. But until then, we have more natural gas than you're ever going to need. Okay. And we also, it's the cheapest feedstock. And I think the only feedstock that is cheaper, I think, is in Russia. Okay. And I got to tell you, most people would rather deal with a friendly Western democracy like Alberta. And so, I really encourage people to come check us out. We don't just have a great natural resource, a cheap feedstock. We've got low corporate taxes. Yeah. In Alberta, we're a low tax jurisdiction. Yeah. So we have the lowest corporate taxes in Canada. We're cheaper than 44 U.S. states. Wow. We're in line with Louisiana and Texas. Wow. We've just recently dropped our personal income taxes. We have no sales tax, and boy, do we love to cut red tape. So we have cut 35% of the red tape in our province. We've saved job creators $3 billion, and we've made it easy for market entry. We don't like to give subsidies. We're fiscal conservatives, but we think if you have a competitive environment, you don't need a subsidy. Low cost of entry is what investors are asking for, and we offer all of that in Alberta.
The LNG marketplace has been moving pretty rapidly the last few years, where we've had Russia still exporting some to the NATO countries, but that's been sort of Trump has certainly not been happy with that. So that's kind of backed off a little bit. The United States has become an LNG exporter, is my understanding, of the last few years. So the market's becoming more competitive. But countries like India and China need more LNG than ever. How is the Alberta LNG scene impacting us here, maybe in the U.S. domestically? And then how are you seeing it play out internationally?
Well, we unfortunately we missed the boat on the first tranche of LNG. And we have a progressive federal government that just didn't see the business case.
Yeah.
And they saw the mistake, the poor foresight they had when war began in Ukraine, and they were wishing that they had moved as we were urging them to. So unfortunately, we missed that tranche. And meanwhile, while we missed that tranche, jurisdictions like Qatar, like Australia, like the Gulf Coast, they got in to LNG big time. We had almost 20 LNG export facilities proposed on different parts of the coast in Canada, and to date we only have one that's actually exporting. Okay. We only just started shipping LNG over the summer. And so we recognize it's a miss, but our federal government, to their credit, is now focusing on major projects. And I believe that we're going to see more LNG going off the coast of Canada. But while we're waiting for that to develop it, we've also got this idea that, look, we don't need to ship. I mean, we want to ship our LNG globally. Don't make me...
why not, right? But
in the interim, let's bring the market to the resource. Yeah. And that's what is so wonderful about this industry is we have this huge supply of gas. It's a cheap feedstock. While we're waiting to get it to the world markets, let's bring the world markets to Alberta. And so we call it selling energy on the internet because we're putting generators that consume natural gas right on the well site, and they're using that to mine Bitcoin. Yeah. And so that is what I'm talking about when I say we're making it easy entry for Bitcoin miners to come into our province. And so we want to generate royalties and taxes for the province on the well site.
Yep.
And if a few years from now we start exporting more LNG off the coast, that would be great too. We have an incredible resource, and the world wants more Alberta energy.
Mm-hmm. Is any energy going to the United States from there for LNG imports?
You're our biggest exporter.
Okay.
So actually, natural gas from Alberta, it goes south. You're our biggest customer, and much of it ends up on the Gulf Coast, and you send it to Europe on our behalf.
Oh my!
So shame on us for not having more LNG export facilities. Yeah. It was the short-sightedness of a progressive government, but we're righting the ship on that, and we're going to start exporting more. But like I said, in the interim, we're going to bring the market to Alberta, and we're going to use that natural gas, that incredible resource, to mine Bitcoin right on the wellhead.
So I've heard a lot about Alberta being, people love comparing things to Texas, especially Texans who, like to think highly of themselves. Yeah. A lot of Texans listen to the show, so no shade at them. But they've said Alberta is the Texas of Canada, and you mentioned like the freer taxes or the cheap taxes or the no taxes. How does that compare though on the national level? Like, what is the business opportunity for, say, a hyperscaler or someone in the compute industry to move up there and work with the federal, the Commonwealth level?
So first, let me just make one correction. Yes. You called us the Texas of the North. We think you're the Alberta of the South.
I love that.
And so we say that tongue in cheek. The fact is, when we come to Texas, we feel like we're coming home because we're two freedom-loving jurisdictions with entrepreneurial spirits, low regulation, low taxes. We're very much aligned. Yeah. So we love coming to Texas. In terms of the advantage, there's just so many advantages to doing business in Alberta. And I mentioned the natural gas, the low cost of feedstock. But I also want to focus in on the red tape reduction. Because we've reduced 35% of the red tape in our province. And we saved job creators $3 billion. And industry loves it. But they also said to us, you know what? Your permit approvals are taking too long. Like, we love the red tape that you got rid of, but now speed up permit approval. Yeah. So we rolled out a process called automatic yes. Yeah. And we're doing some things very similar to what you're already doing in Texas. Permit by rule, which takes the permit, gets rid of the permit entirely, replaces it with a checklist. We're also rolling out shot clock, which I think you did 4 or 5 years ago. You rolled out shot clock. And so if we say a permit will be approved in 6 months or 3 months, whatever the time frame is, if it hasn't been approved by if you haven't got a yes or a no, then it's deemed approved. And this is going to put us on the forefront of not just red tape reduction, permit approval, and make us a business-friendly environment. And when you have all of these factors, I tell you, job creators love it. Yeah. When they come to Alberta, they don't ask for a subsidy. Yeah. They just want to break ground and get to work. We had a large Bitcoin miner, because remember, this is also a learning curve for us. Texas went here first. We're getting there now. So we're figuring some things out, and we had a big Bitcoin miner that broke ground, and they encountered some roadblocks. And within a day, we had 4 ministers on the phone that fixed the problem almost instantly. And it's because this industry has our attention. We see the value of this industry. So there are hostile jurisdictions that don't want Bitcoin miners in Alberta. That's not us. Not only do we want you in our province, we're going to roll out the red carpet. If we encounter any roadblocks, we're going to work with you. We're going to do whatever it takes. For our larger, over 200 megawatt facilities, we have a concierge program. And so this concierge will work with the company to do everything that they can to get shovels in the ground as quick as they can. So I hope it landed with you. We want this industry in Alberta, and they're more than welcome.
So from the energy perspective, I'm interested in this because I know the U.S. energy side pretty well. Like we have the different ISOs like PGM, ERCOT, et cetera. Yeah. How does that work in the Canadian market and then Alberta specifically? And is there any sort of rules that anyone who wants to come and do compute there should know about? It seems like the most of the generation you're talking about is going to be like quote unquote behind the meter, where people can just find some sort of generation source, plug in, and they don't need to connect to the grid at all. But is there any other rules or any ways that it's structured that would change that?
And I should be clear. I mean, we're fast, we're efficient, but it's not the Wild West. There are some rules, right? We want to make sure that everything is responsible, and so there are some rules that you have to follow. But I'll give you an example. If you want to put a 10 megawatt generator on a wellhead and start mining, this is for small producers. This isn't the first time we've done this. We've got miners that are already doing this, so we don't need to reinvent the wheel. So we've got rid of the permit for that, and we say if it's 10 megawatts or less, you don't need a permit, you just need a checklist.
Nice.
And I'm hearing that within 5-6 days, companies are breaking ground.
That's awesome.
It's awesome news. For the larger ones, they are more complicated because there's more risk with them, and so there's a process. You go for the Alberta Electrical System Operator, AESO, the Alberta Utility Commission. But I got to tell you, like, these are regulators, but they're also, they understand the direction that our province is going. So we host the Canadian Blockchain Consortium hosts a conference every July at Stampede in Calgary. And
I always heard good things about that one, by the way. I've heard it's like a little too fun.
Well, it's it is a lot of fun. There's no doubt. But make no mistake, a lot of business happens. A lot of contacts are made. So if you haven't been, I would encourage you to come.
Okay.
It's Stampede in Calgary, July 6th to the 9th or 10th.
Okay.
And it's a lot of fun. But a lot of good things happen. We have government days. And this is where investors globally descend on Government House. And we have legislators that come. We have ministers that come. The premier, so that would be like our governor, actually comes for 2 hours and engages with industry. And we have regulators there as well. The AESO will come. The AUC will come. And they will listen to hear what industry's saying. So they know the direction that we're taking. And they are doing a great job speeding up the time to market.
What do you know about the capital formation side of things for getting some of these deals done? It's been a big topic here at NABS, the fact that like in Texas, there's a lot of private credit that's coming in interested in bootstrapping some of these projects. There's a credit union that was here on the conference hall. They can loan up to $25 million. It's just like kind of the start, right? Like there's a lot of other ways to get the capital. Is there anything in Alberta specifically that the Alberta government's doing, or on the federal level, or maybe just even on the enterprise level you're seeing happen?
What we're doing is making the ease of entry into the market to be as seamless as possible. I'm working on the roadmap for Bitcoin to sort of chart out the path that we're going, and this is how we're going to make it easy for industry to come to Alberta. We've got the Alberta Treasury branch that is starting to embrace Bitcoin. We have a Bow Valley Credit Union that is doing a great job in this industry, but we have a ways to go.
Okay.
Our major banks have some work to do. There's no doubt, and that's part of why we are creating the roadmap for Bitcoin, because we acknowledge not everybody is where we are. So we need to get the banks there. We are looking at the Alberta Bitcoin Act and what needs to go into the Alberta Bitcoin Act that will, signal our intent to the international investor community and also make it easier for entry into the market. We're looking at things like the Strategic Bitcoin Fund and seeing what's been done in Texas. And they've done some great work. And so we want to have a strategic Bitcoin reserve in Alberta. Now we've got a sales job to do, because I spoke to a couple of senators while I'm down here, and they said, it was a heavy lift. But you know what? We're prepared for that heavy lift. And that would send a strong message to the global community about where we sit on Bitcoin. And not for nothing, it'll also be a great hedge against inflation as well.
Yeah. For the Bitcoin side of things, let's expound on that a little bit. From the Canadian perspective, is that something that's even being considered on the federal level? I mean, the Trump administration here in the U.S. has obviously been vocal in, depending on how you want to take it, like good or bad. Like there's some good things, but also very bad things, in my opinion. But what are you seeing on the federal level for Bitcoin integration, and then some of the other provinces as well?
So unfortunately, not enough. Okay. We're going through that phase in the business cycle where you had Biden. And we're a little bit along those lines. Okay. We have a federal government that is not friendly towards Bitcoin.
Yeah.
So we have some work to do. So the good news is we don't need them on the provincial side.
Yep.
If you want to come to Alberta, if you want to invest, if you want to use our energy, you only need to deal with the provincial government and the provincial regulators. As long as you're not building a pipeline that crosses a border, you're good to go. So and listen, part of our goal is to bring the feds there.
Yep.
I would like the feds and the rest of the jurisdictions in Canada to see what we're doing and embrace this as well.
Okay.
We our message on an energy side, and just to pivot back to that, is we have this huge resource, but we don't have that much capacity. We have a little additional capacity on the grid, but not that much. So we're actually saying to large Bitcoin miners, bring your own power.
Yeah.
And that's the secret sauce, is you bring your own power. And some of these companies, they're bringing their own power and they're still connecting to the grid because we allow for self-supply with export.
Yep.
So there are times in the business cycle when it's more profitable to export electricity to the grid than it is to mine. And in that case, do that.
Yeah.
And so we are just coming up with options for companies that do want to invest.
Have you seen any inquiries so far from hyperscalers or big teams like Google, then the CoreWeaves or the OpenAIs?
I can't mention any company names, but I can tell you that there are a lot of big companies that are in Alberta that are kicking the tires and they're looking to invest. You may have heard of Wonder Valley. It's just outside of Grand Prairie. It's got an incredible natural gas basin there. And we are looking to turn that into a world-class destination for data centers because we've got the energy resource right there. We've got the internet connectivity. It's a great spot. So can't confirm names. I can just tell you there's some big companies kicking the tires right now.
Long Alberta. Well, thank you so much for joining today. I really appreciate it.
What a great conversation. Thanks for having me.
Thanks.
Cheers.